This is your weekly pre-market prep, June 16th, 2024, where we're going to discuss your key levels, market moving events. We're going to discuss the action and callouts that we had last week. We're going to discuss what you can look forward to this week. I'm going to give you my trade plan, and I'm going to include some training. So watch the end of the video. We're going to talk about how VIX plays into successful trading in summertime trading and how you can remain profitable throughout the summer months. Are you ready? Your weekly market prep for June 16th? Let's get it. All right, so as discussed, this is your weekly market prep. Let's get right to it. Here are the tools that you're going to need before we get going. We've got our 90-day day trading journal. Write down your actions and quantifiable data points so that you can measure your success and come out of each day, week, month green. And then when you sit down for one-on-ones with myself or anyone else, you'll have something to track there, so you can get the link. Get that attached to the link down below. How to day trade with a full-time job. There are 4 videos that you can purchase along with the training. I show you the trainings and setups in the book, in the video training, and then we've got the trading indicators that provide signals. Understand how to read them and use them, and you are going to the bank. All right, so here's what we're going to discuss. We're going to discuss last week's action, the sentiment, the news as we go. We're going to talk about this week, the sentiment, news, levels, FOMC, results, or Fed members talking, all that cool stuff, and then the plan. We're going to talk about what people are saying about this Discord, this community, the trading and the training, how it's changing lives. We're going to talk about the indicators. We're going to weave that in there so that you can see how we use them for setups. And then we're also going to talk about any free training that you may have available to you that you can use to crush this thing. All right. So right away, I want you to look for this video. 1 million in profits. I've helped many traders over the years hit 5 figures, 6 figures per month, and now 7 figures. $1 million in trading. So the interview, the live trading and live training is live online. It's on YouTube. You can find it, cost you nothing, free game to look at how this Discord is pumping out successful traders. Our goal is to be the #1 Discord to produce the #1, the total amount of 7-figure earners. So to do that, it takes time, it takes effort, and we're starting to see people turn the corner, okay? Now, here's the free training that you have available to you. You can watch that video. You can get some training there where we help one of our local resident members. And then the first time he hit 100 grand, we did an interview there. So it's really a full circle interview. What does the training get you? It's going to get you skill and mental development, market awareness, reaction times, patience, consistency. All of that comes from being inside of the community, being inside of the Wealth Wells in a private channel here in the Killer Wells, right there where I post my levels every single day. And then we do trade recaps. I'm in the futures channel. We got all kind of cool stuff there for you to improve your trading. All right. So here are the major events we're looking forward to this week. PMI, Fed talk, housing numbers. We're going to have some real estate numbers pumping out this week. And we've got Juneteenth, middle of the week, going to see a market pause there. So this is the data events that we can look forward to as discussed, right? So we've got a number of Fed members talking. We'll talk about that in a minute. That's going to introduce a little bit of volatility into the market. The market is stretched at this point, so we are really watching for retailers and big money to make a shift in the market, and that's going to be on the backside of the catalyst that we see here in front of us. Okay, so Tuesday, Thursday, or rather Thursday, Friday, we should see the market kind of respond a little bit to these all-time highs. All right. So the Feds, they got a number of Fed people talking this week. Monday, we have 1 o'clock popping off. And then Tuesday, 10, 1, 1, 1:20, and 2 p.m. All right, we've got all kind of Fed members talking. What to watch for? Fed speakers lead week. That includes retail sales data and PMI. Following the most recent interest rate decision, investors will hear from Fed Reserve officials throughout the week on the state of the economic conditions, the progress of inflation, and the path of interest rates. Investors will be closely analyzing the Fed representatives' remarks on inflation, reports released last week showing prices trending lower again, potentially putting the Fed in a position to begin cutting interest rates. The jury is still out on that. We'll see. So this week you got Cook, you got Harker talking, you've got Logan talking, Barkin talking, you've got Masalam talking, you've got Goldsby, and all on the docket this week to talk. So we're really watching to see which way their conversation and their demeanor leans in relation to monetary policy, and any kind of inkling of interest rate cuts. You will see the market spike and pop or drop. Okay, you'll see volatility coming to the market, and we need it too, because VIX is somewhere around that 12 to 1260 area. We're going to need some volatility if you're going to get some good, nice, hard moves. Housing data, builder earnings offer look at real estate sector. The housing market will come into cleaner focus this week with the release of several economic indicators, including data on home builder confidence on Wednesday. That's when Juneteenth hits, so we won't really see the market respond necessarily immediately, but leading up to it and afterward, we'll see that. And then housing stats on Thursday, existing home sales on Friday. Investors also get a look at the strength of housing construction on Tuesday when builders Lennar and KB Homes report earnings. High mortgage rates have affected their sales, and KB Home reporting declining sales and profits earlier this year. I mean, that's no secret, right? High interest rates means money is expensive. People, during the pandemic, a lot of people refied. I mean, that's going to last for quite some time. So you're going to see a shortage of sellers, and unless new homes are being built, then that needle will not move, right? And so the interest rates need to go down for the new homes to be sold, right? So we'll see a bottleneck for quite some time. I think for the next 2 years, you'll see a bottleneck. You won't really see interest rates trickle until 2026. That's just my opinion. Accenture, Kroger, and earnings calendar. A few companies are scheduled to report quarterly financial results amid a light week on the earnings calendar. Consulting firm Accenture is set to report its earnings after it lowered its guidance last quarter. The company continues to highlight its effort to integrate AI into its products, and then investors will also be watching the latest financial report on Kroger. I like Kroger. We'll talk about that in a minute. Which post strong results last quarter despite governmental regulations moving to restrict its proposed merger with Albertson. So, that was kind of paused, but, Kroger's still strong. So we'll see. The CarMax report on Friday will offer insight into the retail automaker in the U.S. All right. So here's our earnings this week. A light week, not a whole lot going. Okay. We understand the market is going to be light and closed on Wednesday. And then we've got a few there. So you may be looking at Accenture. You may be looking at CarMax. I like Kroger. You may be looking at Darden, a couple others, Lennar at the top side of the week. So there's a few there. I don't have many setups that we're going to talk about today because of the week and the context of the week and because of the market being extended. I don't see any setups really that I like except one. We'll get into that in a minute. So no earnings spotlight for me. All right, no real company that I'm really targeting on, but I did see one setup that I'd like to highlight. All right, so this is a swing setup this week, right? Very simple, and we can go to it and look at it, but you can look at it on your own. Kroger is what I'm looking for. My alerts went off earlier, so this is for everyone. All right, my alerts went off. Now, if you've taken the Swing 550 training, right? If you've been in that training, and let me just highlight that for you here, right here. The wealthwellstraining.com, 0 through 8 to 0 through 7. You got to take them either one at a time or in a bundle. By the time you get to 5, that's the swing training. All right. Now in the swing training, starting now in June, I'm back to posting my swings regularly, and we're going to be doing multiple. We're going to be putting together a service for swings only. So you'll get some swing call outs here, or I'll be putting together some packages where you can get only swings for those who want to swing only. But these folks have been, crushing it. I gave a call out last week. Adobe for many people went 400%. I did not get 400%. I took my profit a little earlier, but I did get a couple 100%. And some others, we knew that they would pop. Excellent positioning there. So this is not a guarantee that if you don't take the training, every swing is going to pop, right? I'm about 90% when the market is popping, high 80s when the market is like it is now in my swings. And then we've got other folks who obviously are crushing the swings. I'm very proud of them, and they're following the system. Look at these wins. Now, that may not be a lot to you guys, But if 10 out of 10 is hitting 30s and 20s and 30s and 40s, and then a few of those come up on that 400%, you're going to be very profitable. Very, very profitable. All right. So this is what I'm looking for this week, and the swings will start rolling. You'll typically get 8 swings a month from me, 2 per week. All right. And they'll typically be posted in this channel right here. Again, 8 swings a month, 2 per week. I usually post my swings top side of the week, Monday, Tuesday. I'm really rolling with those, and I'm going for a 1 to 2 week hold on those. Okay, so let's talk about Kroger rather. So the entry is about 49.50. So right around where it is now, I'd like to see a little bit more of a pullback and a hold there. Once I see volume hold, I'm looking for a 2-point move to lock in profit and then let it run. I'm looking to hit my target in less than 8 days. All right, that's the result. Let's talk about the levels and on SPY in the market, and get you ready to crush this thing. All right. So let's hop over here, and here we are with our levels. Okay, we'll talk about the trade plan in a minute. This is just a level snapshot. So top side 5535.50, mid 5502.25, mid 5495.25, mid 5486 area. All right, low side 5493.50, 5429, 5415, and then hard stop, hard break, volume shift 5380.25. Those are the levels. Now we'll get the trade plan shortly. Make sure you transfer those over to SPX and SPY, and you'll do just fine. Okay. Here's the paid training that you have available to you. Again, wealthwellstraining.com, or click the link for the link tree. If you do that, click the link for the link tree right here. I've released trading in the value area. We're going to talk about that today in the training. Stick around for the whole video because I'm going to give you some training and for 1 minute. All right. At the end of my weekly preps, I'm going to start putting in 1 minute snapshot training to help you understand how I trade in one setup you can use. Now I gave you the swing already. I've given you the levels. Now I'm telling you, you can get this training right here, bite-sized training. It lasts for an hour. These setups are gold. They work, hands down. Everyone knows it. And then you've got the core training there. So that's what you have available to you, and you can take it at your leisure. Okay, it's going to improve your consistency and everything else. And then on top of that, you'll need to come into the Discord. Your continuous education is here. Call outs, why I'm in my trade, when I'm getting my trade, when I'm get out, and then the levels, all that cool stuff right there. Okay. We got the VVP indicator as we talked about, and we've got the volume profile. The links will be below to help you understand what to read when volume shifts and etc. Okay. Let's talk about the trade plan now. All right. Let's go over here, and here's our trade plan. All right, so right now, I believe the market is very much overextended, okay? So this being a short week, Wall Street will likely shed some risk. Now, 2 things are going to happen. Either we've got the data print and we're going to continue and we'll fade around this area until some more catalyst pushes us above there. Right now, I think we're due a nice pullback. So here's what I like to do. When I have multiple levels here indicating volume, this really is a zone right here, right? This really is a zone here, just an area of interest for me. And then this is obviously an area of interest down here. Now, what I like to do personally, as I've said many, many times, when I see these levels and my shaded areas overlap with the VVP indicator and its areas, I've got gold, literal gold. Okay, I'm on a 1 hour time frame here. So really what I'm looking for, I'll drop down to the 15 for a minute. Really what I'm looking for is confluence, right? And I've got it. Now, you may be looking at all these levels. These are minor targets. The bigger levels are major targets, all right? What I'm most interested in is this big old red area up here. There's a significant amount of volume up here and sell pressure, okay? And it makes sense. The market is extended. So if we open and we come into this area without any catalyst, I am shorting immediately, and I'm going to just leave it and let it ride down. I'm going to let price action and volatility agree with me. We'll talk about volatility in the morning. Where am I taking it? As I hit my targets, I lock, right? Now, let's go down to the second target down here. This is very nice. This shaded area represents where there is considerable volume, right? If we look earlier Friday, look at how stringy or wicky this action is. This is indicative of low volume, low volatility, and the market's just chipping up. This stopped a lot of people out. Some folks got, a couple of runs in there, but for the most part, this isn't the cleanest action. The action actually happened between that 3 and that 6:15 time frame. Now, here's what's nice about that. If you had right here, if you had my book, then you likely traded this 3 o'clock to 6 o'clock time frame. It's an excellent time frame to make some money. I got the training there for you. But what I'm looking at here is the area of interest that are forming. This represents by pressure, sell pressure, buy pressure, with a area of interest of my own right in the middle. What does this mean to me? As we come to break down and we take out my levels, I am expecting a defensive move right around this area right here. If we continue to break down, these sell orders that sit here will activate and will fill this gap. Overall, what we're looking at is an 80 to 100 point move on the futures. Now that's a nice move on the futures. If you can catch that at a good entry up in this area, then you can let it ride. That's the plan for me. And overall, I will be just taking it to my targets, right? And as the areas of interest and volume shifts, I will be cautious to lock in profit. That is my trade plan. Stick around for the training, okay? I'm going to give you the training in a minute and we can get right to it. All right, well, actually, we're going to start now. So we're going to start something 60-second training, all right? And I'm going to try to keep this one short. The purpose, our theme is summertime trading, low volume. All right, so let's get back to the chart. This is what I want to show you. All right, I want you to pay attention to, let's go ahead and hide that indicator there. All right, I want you to pay attention to the price action. All right, I'm trying to get this done relatively short. Look at the price action on Friday. You see, overall, we're going up. This is a 15-minute chart. Let's go to a 1 hour. How about that? So we can condense it. Look how long the wicks are. Right. This is not the most directional. Most people got stopped out, had to re-enter, stopped out, re-enter, right? So it's nice to when you're after the market has already closed, you know, hindsight is always 20/20, right? Now, of course, earlier, pre-market, very directional. Breakdown, 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 very directional. When market starts to really turn around and we open on US markets, then we start to get this weird buy up and shift in volume. Overall, we're moving up. All right, let's go back to another day that I want to highlight here. Maybe the 31st. Let's go to the 31st. This is a very nice day. All right, Friday 31st. Look at that. Straight down, right? Reversal, straight up. Very aggressive, right? So we like days like this. You love days like, everyone loves days like this, right? This is a huge 6-figure day, maybe even more, right? The backside of the day overall moves up. But this Friday, overall, the entire day is kind of just chipping up. Now, when you dance and you don't have aggressive moves like you did here, your contracts and options is affected, right? So the risk to reward isn't really there. You won't make as much on a day like today or Friday as you would on the 31st. The question is why? Why does the market do that? And what does this have to do with summertime trading? Here's the answer. I'll take you over to VIX, all right? So we're over at VIX. And let's highlight a few things on VIX. We're going to find those 2 days right here. Boom. All right, so here's Friday. You're on a 1 hour. We got a solid 3-candle break to the upside. We got a little bit of a drawdown here, but then we push up. So this means that as the VIX moves up, as buyers are hedging and buying VIX futures, we can hop over there for a minute. And I discussed this in my videos, all right? As the buyers are buying VIX futures right here, then you can clearly see that, all right, the market will be moving to the downside. All right. Now here's what's interesting. As VIX moved to the upside here, right? Well, the market still trickled up, right? Well, if we go back, all right, if we go back to, we're going to go over to, let's say the 31st, right? Where's the 31st at? The 31st is here. There it is. All right. Look how directional this is, right? Elevator up, turn, elevator down, very clean and exaggerated, right? And we saw how aggressive the 31st is. So look at the action, right? 3-candle break, multi-candle break to the downside, multi-candle break to the upside. This candle here is a little longer, but for the most part, they both look identical as far as the aggression. Yet one day, because of volume, obviously, was more directional and aggressive as far as price action. Why? All right, here's the rule of thumb. When you're trading in the summertime, and really anytime, my barometer is 13. 13 on VIX, all right? That's just it. 13 on VIX. Here we go. There's the line. I like to see 13, and I'll explain this in some more training as we go, in 1350. That's the barometer. How does this help you? You should be risk off, low risk. Do your research. Understand how VIX and VIX futures impact the market. That's the name of the Discord, right? The Wealth Wells. What do we teach you? trade like a Wall Street whale. You have to think like Wall Street. So because VIX here is above 13 and 1350, when you look at the market, we'll go back here, you will get, let's hide that, you're going to get a more aggressive move. Look, VIX is above 1350. So this means volatility, buyers, sellers are present at a heavier degree. You're going to get exaggerated moves. All right. You couple that with market data and earnings. Oh, it's going to be crazy. The movement in VIX, if you looked at the candles, they were similar, very, very close. Yet this movement is not as clean. Why? Because if we go back to VIX, boom, then we know VIX is underneath 13 and 1350. Therefore, your risk is off. Your holds are chippier. The price action is chippier. How does that help you? It tells you when you should be piling on risk, when you should be loading the boat, when you should be heavier, when you should be scalping, and when you should actually long hold and know when to leave it alone and let it run out. All right. So that's just a little training on the VIX and how I read the VIX and low volume and for the summertime trading. You should watch my other VIX videos. I help you understand and tie it all together. But more importantly, all of this stuff, everything I'm telling you is really broken down in all of my training, and it's broken down in some of my setups here. Okay. And of course, you can get the rest of the goods on YouTube and help you get to the next level. Okay. So that's it. That's our summary. Market events, we've covered it. What our members are saying, we know what people are saying about this place. It's thebomb.com. Levels, training this week's. We've got this trading plan. We've tried to get this done under about 20 minutes. I'm going to leave you with this, folks. No pressure, no diamonds. If you do not overcome the hard times, these chippy moments in the market, you're not going to be a good trader. A trader, a full-time trader, does not have an option of when they can trade based on their notion. They've got to trade what the market gives them, and then when the market shows up, and then their profits go up even higher. All right. It's been a beautiful week last week. We're going to continue that. KD for the Wealth Wells signing out.